Thank you so much. There also could be a major shift on the horizon in the world of real estate coming up. So many Americans are being priced out of the market altogether, with mortgage rates consistently about 7% and sky-high home prices. But with new actions from the Federal Reserve, analysts are forecasting strong demand come 2025. Joining me now, I have Michael Romer, managing partner at Romer Debbas, LLP. Thank you so much for joining me, Michael. Appreciate your time. The big question on everyone's mind is, will home buying become a more affordable American dream next year? What are you predicting?
Well, first of all, thank you, Marky, for having me. I'm happy to be here this morning, and I'm happy to share some optimism. There's a renewed sense of optimism in the housing market. Over the last couple of years, in many markets across the country, the cost of housing has doubled. And recently, things are starting to stabilize. We're starting to get some good news out of the Fed when it comes to interest rate reductions, because housing has just been simply too expensive all across the country.
Yeah.
So what the National Association of Realtors recently came out and predicted was that we're going to see a stabilization of interest rates on the mortgage side. They're hoping that will balance out somewhere in the area of 6%. Which is something that the housing market desperately needs.
So stabilizing and not so much decreasing, would you say, mortgage rates in 2025?
Well, I would say first decreasing and then stabilizing. I mean, right now you're in the high sixes, right, in terms of a 30-year fixed mortgage rate. And what they were predicting was somewhere in the area of 6%. Now, we've got a ways to go from that standpoint. My personal opinion is that I would love to see rates more in the area of 5.5. We're never going to see the rates of 2.9 like we had years ago. But 5.5, 6%, that's really where the number needs to be, in my opinion. However, I manage one of the largest real estate practices in the country. November and December have been two of the busiest months we've seen in history. So that, to me, is giving me a renewed sense of optimism that buyers are coming off the sidelines, realizing, okay, I'm going to have to take a mortgage in the sixes, and I can't continue to wait for rates to drop to 5s, 4s, 3s, because that's not going to happen.
Those days are gone. Well, I know American buyers will take any sort of reprieve they can get. What do you expect a second Trump administration to do to the market?
Well, there's been a lot of talk about the incoming Trump administration. During the election, there was talk about the Trump plan versus the Harris plan. In reality, now that we have President-elect Trump coming in, what can we expect? So part of his plan was deregulation. The other part was using federal land to create additional housing units. Now, I think there's logic there. I think that makes sense, but those things don't happen overnight. One of the short-term things I think we can expect is incentivizing home ownership again. So when the initial Trump administration, years ago, we had this SALT cap. Now, coming back again, we're talking about potentially doing away with the SALT cap, which is the cap on state and local income taxes from a federal income tax purpose. But if we can actually eliminate that and allow people to deduct their state and local and real estate taxes again, that would incentivize home ownership. So I'm really hoping the incoming administration pushes that hard, because the country needs it.
Yeah. And lastly, before I let you go, Michael, what are just some other trends that you're seeing right now in the housing market that are catching your eye?
Well, we're starting to see a shift from people that were buying all cash. Now, I'm based in Midtown New York City. Mm-hmm. So I would say the third quarter of 2023, first quarter of 2024, about 2/3 of our deals, our buyers, were purchasing in cash. We're starting to see a noticeable shift of buyers going back to the banks again and obtaining mortgages. And that's a good sign, because we all know there's only so many cash buyers out there. I'm also starting to see on the commercial real estate side of things a renewed sense of optimism. You could actually see the smiles on people's faces again, because we've got close to $600 billion in commercial real estate loans that are set to mature in 2025. So that has to result in activity.
And do you think more people are going back to the office in 2025?
Yeah,
to use some of those commercial buildings.
You'll see a lot of the big banks are asking their employees to come back. The 3-day in the office, 2-day remote, that's become a bit of the norm. But more and more companies are really starting to ask for their employees to come back, because the local real estate economy really needs that, because the donut shops and the coffee shops, they rely on the on
foot
the
traffic.
workforce to be in the office.
Yeah, definitely. Michael Romer, I got to end it there, but thank you so much for joining me the day after Christmas. Appreciate it, sir.
Pleasure. Thank you. Merry Christmas. Thank you for having me.
See you again soon. Yeah, you as well.